Monday. That's right, it's Monday. What up? Another day in the life of a trader trading for trades and doing trades on trades on trades on trades. On trades on trades on trades on trades. So, what happened Friday? It's pretty simple. Basically, let's cruise back. Let's do a little cruise. Let's go on a jungle cruise. All right, through the jungle of the market, we've got this big move up. It moved up pretty hard, basically. It moved up hard enough that it didn't pull back and give me an entry long, so there was no entry for me. And so I just kind of watched this thing go up, and I was like, cool. Went up, broke out. It broke out of that tiny range it had. It had like a 15-point range, and it extended it to 19 points. All right, 15 and 19. Wow, still a tiny. But that's cool. It broke out. We had a pullback. We had a bit of sideways motion here from Tokyo to London, and from London onwards, we've got the setups of a train here. Let's see if I can. Yeah, so it's a little bit. Let's do this from here. Actually, more like here. There, we've got a trend. Cool, right? So that means we got a little bit of time to the open. So what we could do is take this fib retrace, all right? We've also got this bad boy. Let's see. Let's look at this a little bit more. Okay, pullback. I would say, for example, here was an example of a pullback. All right. And that worked out. I would say this is an example of a pullback. Hither. Right there. I would say then you would do this guy. Right? And it hasn't exactly pulled back deep enough, in my professional opinion. Right. On the flip side, it's done a mini pullback here. So you could look at that. I'm not super prone. It's probably going to open up around here, huh? Oh boy. Okay. That's 62. Got about 3 or 4 points there. All right. This is what. So we could either get in here, or we could let it dip down further and get in there. I feel better about letting it dip down and do that thing. Because if we get in here and it just goes, right, that would be foolish, right? It would be better to just let it dip down, and then if it decides it wants to break down, that's cool. Let's let it dip down, and then if it pulls back up, right, that gives us a more evenly structured entry. So yeah, let's do that. All right, where are we at? What? 727. Why is this thing? Oh, there we go. That was weird. Okay. A lot of big things coming up this week. So I wouldn't be surprised if this pulls back. Let me just put this guy on here. Just for like, wait, what the fuck? Okay, so this would be like the 1-pointer. How about let's just do that just in case, because that's just 1 point. So that's like $50 or whatever. And we'll just have a tight stop on that one just in case it blasts off. Well, I don't know. I have a feeling it's not though. We got 1 minute to make a decision. I'm feeling a no on that bad boy. Whoa, snap. Boom. There it goes. Look what saying no gets you. Nowhere. Oh, shit. There it goes. This could be a pump. Who knows? Now I'm like, oh, why didn't I get in that? Let's see. All right. So I think the lesson here is always use the latest pullback. Because here I was like, well, should I use the pullback that was in line with the trend line, or should I use just the latest pullback, no matter where it sits? And let's prepare this bad boy for a pump. This looks like a pump. So we're gonna sell. Whoop. Oh, we want the brackets on. Sell stop. It's super deep into the overbought. So we're going to estimate where it's going to hit the 70, basically. Oh boy. Oh my god, it would have been nice to get, it would have been nice to get in that, right? Good god, man. But that, this is part of, I'm still learning how to execute this. See, when you're confused, when you don't know between one or the other, right? That's how you fumble trade, like, or you don't take it, or, right? Or you take the wrong trade or whatever. It's until you dial it in and then you know exactly what you're doing. Like every time I'm going to take the latest pullback, then, which usually kind of lands around open somehow magically. That's always seems to be the case with these overnight trains. Is a lot of times there's usually like some sort of pullback, really like kind of hovering around the entry, and then okay, so we're going to start to triangulate on this. I think it's going to be around 70. What do you guys think? So this thing's going higher. Damn, this is a huge pump. Holy shit. Maybe I should double down on this guy. Yeah, this is going on. 10 points maybe? So yeah, I mean, if you look at it from 65, like 8 points, that's a solid pump. Yeah, that would have been nice. So okay, right. So you take the latest pump, usually somehow magically sets up around the open, and then you just take that and let it rip. So again, the overnight train on Russell is a hit. Check this out, right? But what's crazy is this hit so hard. It's also setting us up for a pump, which is also crazy. So we're trying to pinpoint the turning point for this bad boy. This thing is so high up, it's pretty crazy, right? Okay, we're getting close. Getting a little bit better idea. Okay, yeah, it's like gone super high up, and now it's kind of sitting at its little peak it's made. We'll see if it just wants to go higher or if it starts to work its way down. All right, we're getting close. We might want to double up on this one. There. That's it.
Stop field.
Right there. Stop right here. I think we only got into one. I don't know why. That was weird. That's weird. I put it in 2 orders and it only entered one of them. So we're moving against the flow right now. So we want to be keeping our stop tighter. And we want this thing ultimately to just drop down and turn to the new direction, basically.
Stop field.
Yeah, it's not pumping super hard, so I just pulled out. Usually with these pumps, it's going to go a lot harder down. And we had a very strong train up. So, yeah. So on the train move, what you'd have is you'd enter here, And then right now you'd have your stop probably like right here. With the train, you're literally just going to trail this up until it completes. With a pump and dump, you want this thing to pump, but then you want it to dump pretty hard. So you'd get in here and let this thing just drop. But because we have the train, that it's still set up for a pump, so it was worth it to give it that opportunity. But you've got a lot of momentum you're working against, so like all this momentum. So the train is totally going to be the better trade when you've got that momentum. When you're trying to pump against all this, it's just not likely to work out. But because it pushed so hard early on, it's worth it for that opportunity. But that's why I kept my stop so tight, was because if this pumps, I want it to drop. And if it doesn't drop, then I just want to get out. I don't want to participate in that. So the pump, that was a good entry. That was a beautiful entry. That worked out really, really well in terms of entering. I mean, it was slow, right? So it made it easy for me. It slowed things down. Entry was a lot easier. And okay, that's cool though. I learned something. I'm going to write that down. Learned something new about how to enter. I thought I knew everything about my entries, but apparently not. Still learning the Phantom Train. So I say in the Phantom Train, if market moves in one direction with a clear trend line from Tokyo Open or London Open to US Open, enter on overnight or early in-session pullback. Enter on, I'll say, latest pullback. Pullback at open. At open, 1/3 pullback depth. Where entry does not overlap, where I will say where pullback candles have cleared entry. Enter on latest pullback at open. Usually I'll add a footnote. Enter on the latest pullback at open. You enter on latest pullback at open. Usually open sits close to entry at 1/3 pullback depth where pullback candles have cleared entry. Yeah. So what that means is, let's kill this one and this one. So what that looks like, is enter on latest pullback or at open. So that would be this guy, right? You could even say it was this dude, right? But either of those works, right? But so we had this pullback, right? And then it went higher, and then we had this pullback. So this, I wouldn't count this one because it didn't go higher yet. If it went higher and then pullback, that would be the pullback. But this is the latest pullback because it's responding. Its beginning point is pulling back from a height, right? It's an actual pull, right? So when you move up, right, into new territory and then it pulls back, right, that's what makes it a pullback. It's pulling back from the move up. I don't know. I guess you can make arguments for this bad boy too. Just like, okay, so you could say this is the latest pullback, or this is the latest pullback. So fuck it. Let's say this guy is the latest. Still, right? It cleared at this candle here. Cleared the entry point, which is at 33. So you would still enter at 33 here, which is literally the same entry as if we did it here. So there's not really any difference. The only difference is we would put our stop back here, right? Versus if we did this one, we would put our stop back here. Oh yeah, and okay, so we enter here, right? And then it takes off. Then because you put your stop at the last pullback. So if you enter in this pullback, you put it on the last one. Put it on the most recent one here, then you put it on the last pullback. The latest and the last, right? So here it moved up, right? And pulls back. With this move, with the train, you just want to be like a little bit aggressive opposed to the other moves where this one, we don't know because this has moved up. We don't know where this move is going to exhaust itself. We don't know if this is going to trend. We don't know if it's going to just go up and then this is it and then it goes away. We don't know if it's going to like go up a little bit higher, do another round, and then that's it. So what we do is we just trail that. So now the stop would be right here. So right now you'd be at about 4 points profit. see. Okay, look, yeah, I've started swing trading Forex. And my first little trade I took looks like it didn't work out. I've been working with this system I literally found last week. I started analyzing it and it looked like a solid swing system for Forex. Maybe I will do some videos on that once I get a little bit more confident with how it works. And yeah, it's interesting. Because Forex is much. I feel like it's a very good instrument or vehicle for swing trading because it's easy to hold positions overnight, and unlike futures, there's the whole margin issue. And also, futures tends to kind of centralize its movements around the U.S. Open a lot. Yeah, there's movements overnight and whatnot, but it's a very different beast overnight than it is. So it creates this then during the U.S. session, which creates this kind of like irregularity in its shaping and how it moves and whatnot. So I feel like it lends itself more to kind of the regular day trading patterns of, okay, we're getting ready for the open. All right, here's the open. And it goes through its phases of the open movements, the morning movements, the lunchtime session, right, afternoon. I'm sure Forex has that too, but I feel like not as much. It's a lot more regular, kind of like normalized because there's so much volume and it's decentralized. And yeah, there's a lot of volume, way more volume than, and a lot of times with volume, it makes things a bit more regular, normalized and sticky. So it'll take on more like regular shapes and patterns, kind of like how the ES is a little bit like gentler and moves. It's a little stickier. It's not as sharp. And it's not as sharp, and also I feel that also because it's decentralized, like there's a lot of volume, but it's also there's no central exchange that's delivering all this volume. So no one really knows. You can't really actually do volume-based decisions, right? So you have to mostly make price-based decisions. And so if everyone's looking at price, then those price-based patterns and indicators and behaviors are going to have more precedence, which means trend channels, trend lines, RSI, oscillators, moving averages, all that kind of stuff, chart patterns like head and shoulders, double tops and bottoms, etc., are going to have a lot more weight in Forex. And so you pair that with kind of the regularity of its movements through the sessions and in general from the broad perspective. And really mostly the main thing that's moving it is, yes, there's world events that obviously move in different ways, but I still feel like overall it'll still hold that regular shape. Of course, minus those occasional outliers, which is natural in the market. Nothing is totally regular or normalized. So that being said, I feel like it turns into a great swing trading vehicle, because then you look at all these different pairs, and they all have these regular kind of swings to them and these regular kind of movements. And it goes back and forth and back and forth. And you can really just, if you just have a few simple, like this system I'm using, it just uses a bunch of price-based indicators, all the basic ones like RSI, MACD, moving averages, blah, blah, blah. And you're just kind of allowing these things to, and also like a trend channel and whatnot. And you're kind of just watching it move up and down through the channel. And when things line up for it to go in the other direction, you just look for it to set up and take that swing in that direction. And you're able to do it with a nice risk reward. And that's it. It's pretty simple. And you can easily diversify over various pairs. There's lots of different pairs to diversify your move over. And there's also, it's really easy leverage wise. So you don't need a lot of money. Like with stocks, there's not really any leverage. There's very little. You can only, if you're just in a cash account, there's no leverage. And if you're in a margin, then you can do up to 2-to-1. But that's it. So there's not a lot of options there, but there are options. And options have got all sorts of leverage, but they're a very complex vehicle. And they still obey the structure of the stock market, which stock market isn't 24/7, and it very strictly obeys a lot of the U.S. session time. So I don't feel it. And the stocks can be very erratic, and they're not as normalized depending on what stock you're trading. So, and if you don't have a margin account, then you can't even short. So there's a lot of issues there with stock swinging. But with Forex, you can easily just, as soon as you get an account, you can fund your account with a debit card usually, which makes it very streamlined. And then you can trade both ways, and you can leverage your position in a lot of ways where, playing with $500 is actually can yield you some decent money, right? If you know how to work the positions, you can actually make a little bit of money on that 500 and build that up and keep leveraging your profits over time. And actually that account can grow pretty quickly. So that's what I'm playing with 500 just to learn this thing and put on some positions. But yeah, so I put on this one position. It did not work out. And let's see, it only cost me not even $10. It was actually I got it right here. And there's an app, which is cool because the other cool thing is you can just set up alerts. Like, let's say there's a setup happening and I want it to pull back and give me the actual entry point. So I can just go through all the pairs and I can set up an alert on all the different pairs of where I want it to pull back to look for an entry. And then I can have the notification sent to my phone. And that's that. then when the notifications hit my phone, I can actually just place the trade on my phone. Actually, I'm like, if I'm out, and that's what's cool is I'm looking at a big enough time frame, because this is swing trading, where I don't have to be glued or staring at the charts or anything. All that happens is once in a while, every now and then, I'll just open the charts, see where things are at, see if I need to set up any alerts, blah, blah, blah. And then when I get an alert, I just enter into the trade. It's that simple. I can do it from my phone, wherever I am. And then that's it. You just got to set your stop and target and then let it rip. And yeah, that trade only risked I only lost $6 and 77 cents. So there was like hardly any risk at all on that trade. It was just absolutely tiny. But it allowed me to practice. I always like using real money because it's a lot more motivating and challenging working with real money than with I'm just like I'm going through all my. Okay, this is all right. Not good habits right now. Okay, let me just close this up. But I will say it's better to work with real money, even if it's just a tiny bit of money. We have a relationship with our money. Like it matters to us. Doesn't matter if it's $1 or $100,000. But it is going to affect us. Like if losing $6 isn't going to affect me as much as if I lost $6 million. That would affect me way more. I would be like, in a very different mood. So, so like, let's see here, like the train. Okay, check this out. The train, let's get back to this thing. You have your stop back here. And if you wanted to just dial this in more, if you feel like this is reaching a ceiling here and we don't know what the result is, you can just bring your stop in here. And now you're capturing 6 points on this move. There it goes. It broke through. So yeah, just keep trailing this in. You want to be pretty tight with the train. You don't want to be too lenient. There's no point. But yeah, I will say that even though like risking $1 is nothing like risking 1,000 or 100,000 or whatever, it still feels way different risking $1. You think and you feel and you act way different than when it's just simulated money that has that bears no consequence. Like, for example, the Top Step system is awesome. It does have like a combine, which is a tryout to try out for their actual accounts. And that is simulated money, but there is a risk, there was a reward and risk involved with it. Like you're paying money to get something, and if you lose, you don't get it. And you still feel, it's a different kind of feeling though. Like with this, it's like it's literally your money. So you're really tied intimately to every dollar you make or lose. Whereas in the combine, you're more intimately tied to whether you make it in the combine or not. So you're not really as tied to the dollars so much, but you're more tied to whether you're meeting the objectives or not. And so there's a little bit more of a broad relationship to it, but it's still a relationship, and it's kind of a nice in between. But I will say there's less of a commitment in combines because it's easy to you can just reset it and go at it again if it doesn't work out. And you're only going for certain profit targets, whereas here you're going for consistent profits without end, right? You're just continuously doing this to build a regular income out of it. Very different feeling. But whatever it is, you got to have something at risk. At the very least, you got to have something at risk. Just don't bet your dog or whatever, keep your dog. Just dogs are great. And you don't want to lose your dog in a bet. Just saying. It's better to lose money. Or maybe lose out on a hug or a high five. Bet a hug, bet a high five. I'll bet you 3 hugs. That sounds so innocent. If this pulls up, the stop could even be pulled up here. Well, but yeah. So really, the only other trades. So we tried out this pump, but obviously we're in a big ass train, so pump is a no pump. But yeah, this train trade is pretty good. This is a pretty good one so far. Yeah, I mean 6 points is solid. Actually, wait. If we're doing here, this would be 5 points. This would be 6 points. And this is a little bit more than 6. 6.3. But if we get another push up, this would put us at 7 points. That'd be nice. I just like to see the potential of my system because it makes me feel really good, right? To see it perform on point. And that continues to validate. You want to continuously get validated in the abilities of your system and to keep rewiring your brain to be like, oh yeah, it is really dope to trade that system. It is dope to make money. It is dope to see it just like kill it day after day after day, right? It's helping in wiring the brain to function in that way. And the more you get wired to function in this way, the harder it is to take trades that aren't in the system. Because you're just hardwiring yourself to do it this way and no other way, which is ultimately the goal. If you can do that, if you can just wire yourself to perfectly trade your system, then that's all you have to accomplish really in trading. That's all you have to do in trading. It's just wire your brain to perfectly trade in a successful system, and that's it. You win, right? And they say, well, systems don't last forever. I'm like, actually, a lot of systems do. I think this style of trading works forever. It's just there will be seasons or weeks or months or whatever, or days, where it's not, like last week was pretty weak. It was a really tight range. And so there's going to be moments where the range is tight. But then when it loosens up, it starts working again like magic. But it's really simple, really, because it's just playing on basic concepts in the market that they depend on movement. That's all you need. You just need movement, right? But these concepts are very simple, right? I don't know, honestly, I haven't backtested much with the other instruments, but with Russell, which is the only one I'm trading, if it's very simple. If there's, from the London session, if there's a clear trend line, right, like this, in a certain direction, then the open is going to continue. There's a potential energy at the open. See, it's important to understand the concepts behind your trade. Like, what is the whole theory behind this trade? Now, it could be total bullshit, but if you see the pattern over and over and over and over, yeah, why not? You could create a concept around it. That if the London session has been clearly moving and trending, like, so we've got a trend day, basically, on the London, then the open of the US has a lot of potential energy, and it jumps in on that trend. And it might be very short-lived. Like, it might only go a handful of points, and that's it. Or it might go a lot further, or it might go a decent amount, right? It could do something. But every single time that I've seen this setup happen, so far, 100% success rate. For the past couple months, I've been looking at this trade, 100% success rate. Sometimes it gives a few points. Sometimes it gives more. 10, 5, 6, I don't know, whatever. But it works every fucking time so far. And so when you got something that's 100% success rate, you kind of want to do it. So, yeah. But yeah, the idea is that my theory is that when they've got that much momentum that is consistent, that the US Open is just carrying through with that and using that potential energy of the Open to just carry that farther. And the thing is because it's already in a move, right? We don't know if it's hitting the end point of that move or if it's going to carry it further. So that's why the one thing I do with this is I don't have a target, because we want to give ourselves, like, if this just keeps going and turns into a trend day, then we don't want to have a target. We just want to keep trailing this. Which, by the way, now our stop is like right here. So we've pulled in about over 6.5 points on this one. So it's a solid trade. But yeah, there might not be any other opportunities today. So that's fine though. I'm really happy to see this trade just continue to just crush it every single day. Not every single day, but every single day it shows up. But yeah, that's why we trail the stock, because we don't know if it's just this is it right here, game over. So you want to have your stop here, or if it's going to keep going. So then you just keep trailing this and following this up. Let me see here. Yeah, so your stop would be at 72.7. Which is like 6.8 points profit so far. And it keeps going up. Gosh, I literally spent like most of a significant portion of yesterday just researching cat food. It's so crazy now. Like there's so much information and there's so much diversity of information on any kind of product, anything that you want to look at. And you want to make sure you're getting the like a quality thing. You don't want something breaking, or you don't want to feed your cat poison or whatever. You know what I mean? So there's just so much, every single thing, every single product. Like when I was putting my place together, every single thing had its own little universe. Like even like, I'm like, I wonder what I want to use to hold my knives. Okay, wow, you ready to go on a jungle cruise, man? Because there's a lot of fucking things you can use to hold your knives, right? It doesn't matter what it is. A cutting board, that's the whole universe, you know? Or if you want to get like a pull-up bar, that's a universe, right? There's just so many different options and possibilities and products. And then it's like, people literally make an income, their like livelihood, just helping you navigate that infinitude. Like they're like, here's the top 5 blah blah blah, or here's like my reviews of blah blah blah, or here's like, this and this and this, and here's the pros and cons of that, or whatever. Here's the different types of this and this, right? And those people are godsends, because as human beings, we make so much fucking shit. Like we make so many fucking things now, and it's just going exponential at this point. Like because everything's becoming more efficient, we're able to just like make so many different variations of stuff to try and like to meet, like everyone's trying to like come up with different variations of things to make money and meet different demands and stuff like that, and innovate and compete and stuff. It's like crazy, like how much shit there is now out there. It's so crazy. And it's overwhelming, like to just, if it's easy to just like, oh, I just need some cat food, I'll just grab whatever, right? There's that approach. And then there's like, maybe I want to give my cat something that I can afford, right? What's within my budget, right, for cat food, and something that's healthier for her. And that takes you on a whole fucking journey, right? And that happens with everything, though. If you really want to dig in and find something that, fits within your budget but gives you the value you're looking for, and finding that like happy middle space, fuck, dude, you're in for it. Like that's constantly been my journey with everything here. Whenever I buy something, it's like, what's it within my willingness to pay for, but also fits like enough of like what I want. Damn. Right. So there was like all these brands like I was looking at with cafe. I'm like, damn, some of these are so expensive. I mean, they seem expensive. I don't know. Like some of them I was looking at would cost me like $60 or $70 a month just to feed my cat. And that wasn't even like the top stuff. Like you can go even more expensive than that. You could be spending like hundreds of dollars a month feeding your animal. I'm like, holy crap. That's like a car payment. just to feed the cat. That's crazy. That's like more than I spent on groceries for myself. I swear, you could spend more feeding your cat than you could feeding yourself. Dude, that's a crazy thought. I hadn't think of that. It's like, depending on what kind of diet you want to give your cat. Jesus. But I settled for a brand that was about, I guess would set me back maybe about $35 a month. That was like as much as I was willing to go. Because before that, I was using some sort of brand that was apparently, after researching, I was like, oh shit. I was like, I thought I was buying a decent brand, but then I found out I was buying a really fucking terrible brand that was not good. But it was, I guess it was on the cheap. I thought it was like kind of pricey. You know, it was costing me about maybe $15 a month, maybe 20 if I got the wet food too. Yeah, I was getting the dry and the wet, and that was about $20 a month. But then after doing my research, I was like, oh shit, this is not good at all. And I found like a significantly better brand that would set me back about $35 a month, but it would only be dry food. So, but she drinks a lot of water. So I'm really not, I realize like the only difference between dry food and wet food is wet food just combines the water and the food in one. And dry food is just the food, and then you just make sure she drinks water. So you just have food and water separate. And I'm like, she's really good at drinking a lot of water. So yeah, she drinks a lot of water. She drinks more water than I do, actually. Like I'm bad. I don't have a good habit with drinking water. I've been getting better. I definitely a lot better with drinking water. I used to drink very, very little, but now I drink like semi-regularly. But she drinks she'll drink water after she eats. If she's eating dry food, then she'll drink a lot of water after she eats. If she's only eating wet food, she doesn't drink water after. So, I mean, it kind of balances out. In fact, I think she drinks more water than she would get water from the wet food, actually. She drinks like a full bowl of water like every day. She drinks like more water than she eats food. Yeah, I'm always surprised. I'm like, whoa, your water bowl's empty. Like, I feel it's like a big bowl, and she's a little tiny. She's only like a 7-pound cat. She's tiny, and she just like pounds that bowl, and I'm just like, dang, it's impressive. But yeah, she'll go and nap, and the first thing she does a lot of times when she gets up from her nap, she's like, oh, I'm gonna go drink some water. Like I think that's like what women do. Like a lot of times women sleep with their water by their bed or whatever, you know. Like every time I've dated a woman, they always have like water by their bed, so when they wake up, they can have some water. And I'm like, I've never lived that way. But women just, yeah, I think they're more in tune with that. Oh, this train just keeps moving up. So there's this guy in Park City where I live that actually created this money documentary on all kinds of people involved with wealth, like people in real estate, stock, life insurance, all different kinds of different elements of money. And they're just all giving their 2 cents. And so I'm curious about it. The first episode is coming out live tomorrow, I believe. Let's see. Cool. Yeah, I'm pretty interested to see what these people got to say. Oh, looks like Meow Meow's back. Oh, she's getting really used to the snow. Oh, man, we got some snow yesterday. Hi. Well, this thing just keeps rocking up. So, I mean, basically, it's really simple. You just keep, oh, shoot. Yeah, just keep trailing it. Damn. Man. Now I'm just like, wow. I missed out on a good one, huh? This could just keep trending. Jeez. All right. So that's the lesson with this. This is like, yeah, I mean, the train is a very aggressive move. It's not gonna like it's not gonna like spoon feed you the entry. A lot of times, actually, around the open, it just magically will be really close to where you would get in anyways. So you have to be pretty aggressive with this. You can't just like think it's gonna give you. This is the freaking open. You know what I mean? Like, it's just a lot of times the open's just gonna go, and it's either are you in it or you're not, and we weren't, so we missed on that one, and that's okay. It's all good. Oh, yeah, and let's see. This is just gonna keep going up and up and up. All right, so yeah, you just this whole trade you just keep trailing. Basically, it's up 10. This is almost at 15 points. Good God. Yeah, it's almost 15. I mean, it feels amazing to have created this setup. So I can't wait to effectively execute it day after day after day after day, right? That it sets up. All right, well, I'm going to close out the stream. I think that's enough for the day. And I'll see you tomorrow. Bam, it was like a badass Monday. Let's look. I'm looking forward to a lot of good moves this week. There's a lot of news coming out, so